there's a lot of gray area for us to work in with using these standards and trying to make our best judgment. Okay. So we're done this question. And again, I don't know too much about this retail method because I've never used it. I've used the cost method before several times, but I haven't worked with enough companies in order to see these types of reports. But I do know that they're out there. I do know that it is being used. And again, I think once you have access or experience with one of the standards that we're using, it's going to make more sense. But unfortunately, at this point, I really need to focus on my inventory at cost because that's what I'm good at, and then translate that into what the inventory is at retail in order to estimate that ending inventory balance. So I have to see them side by side. Did I? Oh, you guys, I just goofed up on calling this markdowns. There we go. Markdown, opposite of a markup. There we go. It was just my mistake. Okay. So let's just take a look at our agenda again. Okay, so I would say out of everything that they've given to us for week 3, almost all of it is really important. So definitely with bad debt expense, know the difference between the income statement and balance sheet approach. With your inventory, definitely know the formulas, FIFO and weighted average under both the perpetual and periodic inventory system. And then also I would, once I know those, I would make sure that I definitely know growth method. Give it a good try knowing the retail method. I would say derecognition of accounts receivable and lower cost of net realizable value. They're still important, but not as important as these other topics. So I don't get to see the exam, so I'm just telling you this from how I would approach it if I was reviewing the material. And then the non-trade receivables are important, but as we get into the weeks moving on, those are going to make total sense as well, because we'll be seeing that more, maybe the second module. One warning though, how do you, because I always like to think as a student and see how I would get marked. What if I asked you to I gave you a problem and I said, give me the ending inventory and the gross margin for weighted average under a perpetual inventory system? And what if you gave me a perfect answer to weighted average under a periodic system? How do you think you would be marked on that? Same thing. Give me the bad debt using the balance sheet approach, and you gave me a perfect answer for bad debt using the income statement approach. How do you think you'll be marked on that? Okay, think about it this way. You are in the Olympics, and you're an Olympic swimmer, and you are entering the contest to do the backstroke. And as soon as the whistle blows, you jump into the water and you do a perfect breaststroke, and you come in first, and you're like, yay! And all of a sudden they give you the bad news saying, well, you're disqualified because you did the wrong stroke, okay? So I would assume it's like that. Although these concepts, they're not too difficult once you get the hang of them and once you do enough problems, but golly gee, if you do a breaststroke when we ask you for the backstroke, I think you might be in trouble. So again, read the required and make sure you use the alternative that we're asking for. Okay, so what do you guys want to do here? It's 8:05. We technically have, like if we stop at about 8:20, we have about 15 minutes left. Is there anything that you want to look at? So, I mean, I can go into example 4 with you, and I think I have, I mean, I didn't prepare anything on it, but I have a calculator plug-in. Let me just see if I can get it up on my computer. We can probably go through some of those questions and see if we can get the right answer. I'm just going to stop sharing my monitor for a second. Let's see here. I'm going to share my monitor with you guys again. There we go. Can you guys see that calculator on your screen? Okay, for some reason, now that I'm sharing my screen, it won't let me actually make it bigger. Usually I can get a little bit bigger. But maybe what I suggest is, if you want more experience calculating present value, then I can go through them with the calculator here, and then you can use your calculator at home. So why don't we just take the last 10-15 minutes and do that? Does that sound okay? And for those of you who feel comfortable with your calculator, I'm pretty much done the lesson for inventory, so I'm not going to feel bad if you go. You can just say goodbye and go. But I think maybe what we'll do is, let's do some of the examples in number 4. And now if my memory serves me correctly, some of them are actually pretty complicated too. So we'll just see if we can sort of get to the same conclusion on them. Okay, so the good thing about these slides is they'll give us the example on a different slide, and then I can bring my calculator up and go through them. So if you guys want to find example number 4, we'll work through the first one together. So we're going to find present value at 5 years, 10 years, and 25 years. And this is just to make sure we're using our calculators properly, so you won't have any problems during your exam. Okay, so again, this is the first thing that I check. If I go second and then I hit my PY, I'm using one payment yearly, and then if I use my scroll down button, it goes to CY, and that means it's compounding just once. So that's the very first thing that I check to make sure that it's the same. So if it doesn't tell you, then we're assuming that it compounds yearly. Or if it's a semi-monthly, usually with bonds, then it'd be compounding semi-monthly. But I usually just keep my calculator on the yearly button, and then I make a few tweaks on my calculation. So it's just however you get used to using your calculator and getting the right answer. Okay, so in this case, I'm going to put my 5 effective interest. I'm going to put the 5 IY in. I have 0 payments, so I'm going to hit 0 for the payment. My future value is 1,000. So I always put my future value and my payments in as negative. So I'm going to do the 1,000. I hit the plus and minus button. That puts a minus in front of that. And the number of payments is 5. So I'm going to put 5 in. I don't think I did that. Oops. Backtrace that one. 10,000. No, 1,000 minus future value. There we go. And then the 5n. So I put everything in there. So now I can go compute and hit the present value button. So that'll give me my 783.53, which is the 784. And why negative? Because this is like cash flow. So whenever I put in a negative future value, negative payment, it spits out a positive present value. If you want to do it opposite, you can do a negative present value, positive payment, positive future value. But otherwise, the calculator will spit out the wrong amount. So I just made it a rule for myself that whenever I use the calculator, and I don't use my calculator that often in real life, I use Excel and I use the PV formulas in that, but that's how I get to that. Okay, and then you can go ahead and draw up your amortization table in Excel. So if you want to do this for 10 years, all you would do is change the number of n. So then, I wonder if I can just do it here. So you would put in 10n and then compute present value, and that would give you the new one. So let's just see here. So I wonder if I go 10n, and I have all the information in our calculator, so compute PV. Yeah, that works. You know what? I would just get in the habit of rounding to 2 decimal places for everything. I don't think, on the exam they might tell you how much they want it to be rounded to, but since the marker will most likely be marking it in Excel, Excel is going to be doing the rounding for you anyways, and then I just show everything in 2 decimal places. So I want to keep the formula in so someone can read what my formula was, and then I just show everything to 2 decimal places in Excel. But again, the amount's not going to be material, so you're not going to be marked wrong if you're out by a penny. Okay, and then if I want to do 25 years, again, I can just change the criteria, 25n, compute PV, and that'll give me my 295. Let's see what the other questions are now. Okay, what is the present value of 5,000 to be received in 5 years and 10,000 to be received in 10 years at 7.5% interest? Okay, so I'm going to bring my calculator back up. I'm going to hit the clear button twice to get rid of all the information from the last question. So 7.5 IY is the 7.5% here. We're going to do 5 years first, so I'm going to do 5n. There's no payment in this one, so I'm going to put 0 for payment. My future value is going to be 5,000, so that's how much you're going to receive at the end. So I'm going to put 5,000 negative future value. And then I can go ahead and compute present value. So I'm going to hit compute and then PV, and that comes out to the 3483. And if I want to run the same scenario but use 10 years, then I have all that data in there, and you can go 10n and then just recompute present value, and that'll give us the, oh, I don't know why that did that. Oh, sorry, they changed this. And 10,000 to be received in 10 years. So I'm going to do the 10,000 in 10 years. So now let's see if that'll compute the proper present value, 4852. So I think sometimes the hardest thing is trying to figure out what your future value, payment, and present value are going to be. let's take a look at the third one. What is the present value of a 15-year annuity of $2,500 per year at 7.5 interest? So this is easy because if we have an annuity, that means we're paying or we're receiving $2,500 every year. And since the number doesn't change, oh, sorry, somebody asked me if we have classes next week. I don't have it scheduled. Is that true? Do you guys have? I don't have the calendar in front of me. I'm pretty sure we don't have class next week. So just double check on Desire to Learn. Okay. I do remember when I was a student, we actually had to calculate the present value of an annuity. Good thing we can just use our financial calculator. So the way that I would set this up is we're still going to have the 7.5 IY, and the number of years, it's a 15-year annuity. And the good news is because I'm receiving $2,500, so the payments are the same every year, then I can just do this using these buttons here. So I put my payment in as a payment, and I put it in as negative, because I always put payments in future values in as negative. This time, you're going to have 0 left over to receive at the very end. And then we want to compute our present value, and then that gives us the 22,067. Okay, I'll double check the schedule, and then I'll just put a little discussion up on the discussion board under week 3 for you guys. I'll check that after class. I know one of the weeks we don't have it. Okay, now let's look at this one. Okay, so this one, I think when I taught this last time, it was hard for me to wrap my mind around what was happening. And I don't think when we're calculating present value, when we're trying to do journal entries for this stuff, that it gets this complex. I guess, taking a finance course, this would probably be easy. I don't know, you guys, about the quiz, if it's canceled or not. You'll have to definitely look at the schedule on Desire to Learn. Okay, so in this case, they're saying, what is the present value of 5-year annuity of $10,000 with the first payment to be received 5 years from now at interest of 7.5%? Okay, so what we're going to have to do is, in 5 years, we're going to have this $10,000 annuity, and so then on year 5, we're going to present value that. And because I want the present value for today, I'm going to have to bring that back again to now. So that's why we have the 2 calculations. So if you want to look through, I think there's a calculator tutorial. It shows you how to use the cash flow button when you're dealing with more than one amount for an annuity. And then you don't have to do the 2 separate calculations. But for me, I'm just going to keep doing the 2 separate calculations. So I've got the 10,000 minus payment for 5 years at 7.5 IY with the 0 future value. So I'm going to compute the present value for 5 years from now. So that's the 40458.85. And now I'm going to take that amount and I'm going to plug that in as my future value. So that's the amount 5 years from now. I'm going to put that as a minus. 40459 minus future value. And now I'm going to have no payment from now till 5 years from now. I'm still going to have the same 7.5 interest rate and 4 years left on that. So I'm going to compute that. Present value of 30296. So is it just me, or was that one a little difficult to calculate? So if I was looking at this as a student, I would have had to draw out that timeline so I could understand the context of this question. Okay, let's take a look. I think there's only one more left on this one. Oh, here's a mortgage. So this one's perfect. So we take out a mortgage for $350, 3.5% interest per year. Yikes, that's high. Amortization period is 25. So we want to know what our annual payment is. Okay, so it says we can either prepare a full amortization schedule or find the PV of the mortgage after the fifth payment. Okay, let's go ahead and calculate this to see if we got that payment correct. And then I'll show you something kind of neat in your calculator, but I didn't show it to you last time because you do have Excel to put your amortization tables together. Okay, so let's try this. 350,000 present value, 3.5 IY, and then 25N. And I'm going to have 0 for my future value because it'll be paid off in 25 years. So compute payment. So now I've got that 21235.91. So again, it was 350 positive present value, 3.5 IY, 25N, 0 future value, compute payment, and that's what comes up. So what it wants us to know is what the balance is after the 5th year of interest. So this is the calculation they did in Excel. So you could have generated this present value table. But I'm going to show you a shortcut. I think they're asking in year 5. So I can get this same amortization table in my calculator. All you have to do is go to second and then hit the amort button, so it's the PV. And we want to isolate P1 as the period. So I want period 5. So I'm going to hit 5 and then hit enter. And then I'm going to scroll down. So I'm telling you I want to just hit line 5. So period 5 to period 5. So I'm going to hit this one. 5, enter. And now it's going to tell us the balance. 301,813. 301,813. So I usually showed that step when the students were writing manual exams because there's no way you could do a table. You'd do your whole exam doing a table. So if they were to be asked, what's the balance after year 5, then they can just pull out the amortization table in their calculator. Okay, you guys, I'm tired of talking. So I think we're just going to call it a day. I think we've gone through tons of material. There's a lot that you can work with. I'll post up on the discussion board when our next class is. And then we'll either see you next week or the week after that. And again, please take the time and just work on your project. Okay, we're done.